Okay, thank you so much. Glad to be here. Let's go ahead and get started. All right, well, welcome to the presentation, Simple Seasonal Setups, my number one chart pattern for trading seasonality. This is Silas Peters from seasonalswingtrader.com, and really appreciate you spending some time with me today. We'd like to go ahead and do a quick sound and audio check. If you can do me a favor, type in Y if you can hear me. Can you hear me loud and clear? Please type a Y. Okay. All right. Y. All right, excellent. We're going to go ahead and proceed. Let's move on to the standard risk disclaimer as required by our government and regulatory bodies, the CFTC, the NFA, and the SEC. If you haven't familiarized yourself with the risk disclaimer, please take a moment and read through it quickly, and if you'd like a copy, I can send it to you after the presentation is over. Bottom line, there is risk in trading. Do not trade with funds you cannot afford to lose, and always consult with your CPA or tax advisor before trading personal funds. Okay, let's get to the fun stuff. Who am I? My name is Silas Peters. I am the founder and operator of seasonalswingtrader.com. As the name suggests, we specialize in trading seasonal patterns using technical analysis. We trade all markets, futures, options, stocks, and forex. A little bit about myself. That is me at my alma mater in front of Bryant-Denny Stadium with my two pride and joys and also future cheerleaders at the University of Alabama. Roll Tide. After graduation, I spent some time in the heart of the financial district at the Chicago Board of Trade, working for an institutional trade desk, executing, managing trades for our hedge fund as well as other banks, institutions, and professional floor traders. I've been involved with owning and operating broker-dealers, equity trading desks, futures clearing firms, and auto trading. Also spent some time in asset management, managing fixed income and equities for private trust clients and private family office clients as well. So that's a little bit about myself. Feel free to reach out if you want to say hello. This is my trading desk. I've got 14 monitors, a laptop, a desk phone, and 2 cell phones, and 1 yellow notepad. Just kidding. That picture is from the internet. My trading desk is nothing like that nor that elaborate. I do use 3 monitors for looking at trades and trade setups and managing positions, and then I have 3 other monitors that I use for work and operational day-to-day tasks. Paralysis analysis. Are you a victim? Paralysis analysis, per Wikipedia, is the state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. Type a 1 in the chat if you are a victim of paralysis analysis. Type a 1 if you are a victim or have been a victim of paralysis analysis. See lots of 1s. Still a victim, was a victim. Victim, 111, victim. Well, good. The purpose of today's education is to remove you from being a victim of paralysis analysis. If you like where you are in that particular situation, then more power to you. I have been there and done that and have the t-shirt. It is not fun. There is a better way. There is a better life. There is a better way to trade. So I found out through several years of trading and working with traders and clients and gurus and mentors that I've always fallen back to the KISS principle and just downright keeping it simple. Now, I am self-admittedly an indicator junkie. I love charts, I love indicators and the latest whiz-bang features, but at the end of the day, I always resort back to simplicity, the basics, and what has worked over decades of various market conditions, and I feel that it generally just makes my life easier and causes less stress for me and my loved ones. So what do you trade? You trade stocks, ETFs, options, futures, either the index futures or the commodity futures, forex, cryptos. Let's go ahead and see what the crowd is currently trading. Stocks, options, futures, stocks and ETFs, options, futures, forex. Got one crypto guy in there. All right, great. Well, that's very helpful. Well, what we're going to learn today is that this methodology and this indicator works on anything. Any of these markets you currently see on this list and or trade, this method and this indicator that we will take a look at together works on any markets and any time frame. Using a little bit of common sense, wouldn't you say that if a methodology or an indicator is so great, it should therefore work on all other markets? Would you agree with that statement? Okay, good. Now, there may be some obscure things that work on cryptocurrencies or the forex markets or any of these others that may only be specific to that particular underlying or that type of market due to various nuances. But generally, overall, looking at a daily chart on any instrument, looking at an intraday chart on any instrument, you should be able to apply that same quote-unquote system or method or indicator on any market and or any time frame, and you should still see similar results. And that's exactly what we're going to look at today. Okay, more good news. What I'm about to share today, we'll get right to the meat here shortly. Highly accurate, profitable, that's pretty important. Works in all markets, works in all time frames. My favorite, 99% mechanical and simple, S-I-M-P-L-E, simple. What makes this different? No balance sheets required, no listening to CNBC, Fox, or Bloomberg. Historically reliable and repeatable patterns and setups. Everything taught today can be implemented immediately after the session is over by new or seasoned traders alike. You will want to throw all other indicators away once you see the simplicity and accuracy of this pattern. And simply put, these methods and strategies are not going anywhere. Go back, and I encourage you after the show to look back at various markets as long as you want, and you will see them set up time and time again. Why are you here? To learn my #1 chart pattern for trading seasonality. Disclaimer, you do not have to incorporate seasonality into the setups. You can trade the setup naked, if you will. However, I do like the double confirmation aspect of trading it in conjunction with seasonality, or vice versa, let seasonality clue me in on a possible setup and confirming with that pattern. This training includes how to trade high probability seasonal setups that are historically reliable and accurate, they're powerful and repeatable, and they're based on technical and seasonal analysis. Here's what you're going to learn during this training: how to look for profit opportunities in just 15 to 30 minutes a week, how top traders, institutions, fund managers, commercials, and hedgers are able to make money year after year, how to remove the emotion from your analysis and keep things simple and objective, how to achieve market-beating returns without being a guru. My big promise to you, this will be fun. You will enjoy taking an unbiased approach to the markets, learn to diversify, take long and short positions, trade stocks, commodities, and currencies, or options on any of the above, and again, newbie and experienced trader friendly. The setup is the 1, 2, 3 pattern, the 1, 2, 3 top, the 1, 2, 3 bottom pattern. Is anybody familiar with the pattern? Yes, yes, no, 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 yes. All right, there's a pretty healthy mix of yeses and nos. Good to see. All right, so this is nothing new in the markets, but this is absolutely my #1 bread and butter trade setup. In fact, this setup since October 2016, Seasonal Swing Trader has issued 102 commodity trade alerts. 85 of those 102 were based off of the 1, 2, 3 pattern, equates to approximately 83%. 60 out of those 85 were profitable, equating to a 71% profit factor rate. And since October 2016, those patterns alone have generated $115,295 per a 2-contract basis. Let's get to the meat of the setup. It's sometimes referred to as the ABC top or ABC bottom. It anticipates a change in the trend from up to down on a break below the #2, or the B point, or anticipates in a change in trend from down to up on a break above the number 2 or B point. Generally speaking, the more bars it takes to complete the pattern, the bigger the move. Confirmation of entry is on a break or close above or below the number 2 point, and we'll show you how to improve that accuracy here in a moment. Again, to keep it mechanical, exit strategy number 1 is the distance between the number 1 and number 2 points. Exit strategy 2 is taking profits at the 50% retracement level. So here's a chart example on a 1, 2, 3 top pattern. This is a daily chart of the Australian dollar. Notice that the number 1 point was put in at a 52-week high. Prices moved lower to establish a number 2 point. The market then rallied but failed to make new highs, i.e. did not take out the number 1 point, which then made our number 3 point. Once we see the market move down through the number 2 point, that is the trade trigger or trade entry. Initial risk goes above the number 1 or number 2 point, and your profit target is the distance between the number 1 and number 2 point. In this case, 159 ticks or points in the Australian dollar. That's $1,590 per contract in the CME 6A futures contract, and that reached the profit objective in approximately 20 trading days. Here's a 1, 2, 3 top pattern in the 5-minute S&P. I know that there are some day traders here. Notice that the S&P put in a session high, creating the number 1 point. Prices moved lower, found support, creating the number 2, moved back higher, could not take out the number 1 point. We then had a potential setup here with a short trigger below the number 2 point around 24.15. The target on the trade was 7 ticks, and it looks like it met that objective there in about 10 or 15 minutes. The 1, 2, 3 bottom, it's going to be the same principle, the same concept, but inverse. We have a 52-week low here on the daily lean hog chart. Price put in a number 1 point. We rallied up, put in a number 2 point here at 67.35, came back down, forged a higher low, which gave us our number 3 point. We then traded up and through the number 2 point, giving us our entry price. We simply measure the distance between the number 1 point and the number 2 point. We stretch that out, put resting limit orders here, and that market was filled for a gain of $2,950 per contract. Here's a weekly chart on Apple. No, everybody likes to trade Apple. A weekly chart here on Apple. We have a 1, 2, 3. Notice that the number 3 did not take out the number 1. This is also a double bottom here. We take out the number 2, and we know before we enter the trade what our risk and target levels are. Once the trade is triggered, we have contingent orders or OCO orders to take us out of the market once we reach this area here, or if the market moves against us to get out here. It's a 1-to-1 risk-reward ratio. However, when you have the ability to trade multiple contracts, that is where you really have the ability to scale, because you can take your initial batch off at a 1-to-1 risk-reward and then trail the market using trend lines and other techniques to capture additional gains. Now, if you remember me preaching earlier that this setup works on everything. If it works on one market, it should work on all markets. Pips, if you're trading the forex market, Pepsi, pot, that is actually potash, but if you're trading marijuana or cannabis stocks, it should work on that as well. Personally, I haven't looked at those. Pork bellies, actually a market no longer traded in the Polish zloty. And to reiterate, and on any time frame, as we just looked at a few chart examples, tick, 5-minute, 15-minute, hourly, 4-hour, daily, weekly, monthly, yearly, and if there's anything past that, it probably works on that as well. Any trading style, futures, options, stocks, and forex, whether you're a scalper, day trader, swing trader, or position trader, and works on any time frame. Okay, you have seen the proof. Let's move on to the fun stuff and view some live chart examples. One thing that we haven't touched on is how we like to trade this setup and this pattern coupled with seasonality. In fact, that's what we are here, right? My number 1 pattern for trading seasonality. But remember, you can really trade this pattern, quote-unquote, naked, if you will. You don't have to combine it with seasonality. But when you put the two of those together, it really puts the odds in your favor. So let's dive right into the chart. Somebody throw me a ticker, throw me some symbols, any market. Stock, futures, currencies, ETF. Somebody throw a couple of tickers. All right, Lulu, Johnson Johnson, Caterpillar. All right, Angela was the first to respond. Thank you for your participation. Okay, let's go right to the charts, and we'll type in ticker symbol LULU for Lululemon, LULU, Lulu. And notice here on the right-hand side, we've got what we call our seasonality component. This is obviously the daily chart, daily price action over here. This is going to be your seasonality window for the Thinkorswim platform. And to enable that on the Thinkorswim platform, you want to go up here to the top right to this little 3-bar sandwich option. Select that. Select the first option, Style. Come down here and go to chart mode, and notice that I've got seasonality checked. I don't know what the heck a monkey bar is or some of these others, but notice we have seasonality checked, and that will load the seasonality component in to your 2-pane chart window on Thinkorswim. Again, this is all explained with an easy to read document in our members area for the Thinkorswim platform. And what this is basically telling us is that this is the current price. This aqua or turquoise line is the current price. This red line down below is the 5-year price average. So here we are in the first week of August, and you can see what we're doing from a price action perspective up here, and seasonally on a 5-year average. You can expand this a little bit to get a better visual, but notice that we tend to possibly do some topping here right around this period. So right around here, mid-August or so, we could expect on a 5-year average to see some potential weakness before we maybe go higher there into the latter part of the year. So that's all good and great. And so what is the daily chart telling us? Well, you can see that 1, 2, 3 indicator has flagged a top, a confirmed top actually. We have the 1 here, the 2 here, and then number 3 point here because we did not take out the number 1 high. It triggered here on the, looks like to be the 24th of July. That's when we broke out down below the number 2 here. So we broke out down below here, and we met our profit objective in 1, 2, 3, 4 days right there at the moving average. So that was a very nice quick trade, and what happened is it gave us the preferred conservative entry. What does that mean? It means that it broke out right here, came back up, retested right into those averages, and then came down and quickly met the target. So we had high here of 130.50, a low here of we'll call it 124.5. So we're looking, for about a $5.5 gain. Came down here and tagged the target here at 119.65, almost right on the nose before rebounding higher. And more often than not, you will see that type of price action occur. It's almost uncanny how the market will reach its 1, 2, 3 top or bottom price objective, reject off that price level, and then quickly reverse. Does it always happen? No. And we'll go through some other examples here where you can really scale and leverage your gains by trading multiple contracts for when those markets want to continue their downward spiral or continue into strength. So the premise is to take the profit objective at target number 1, which is the objective between the number 1 and number 2 points, and then trail the market using standard technical analysis such as trend line or moving averages or whatever your favorite trailing stop technique may be. Going back and looking at a couple of other examples, you can see we were trying to put in tops here, never confirmed. We put, because the price never traded down below the number 2 point, and then we subsequently made a new high, so that started the count over. 1, 2, 3. Boom, made a new high, so started it over. Here we got one more retest, one more push higher. Couldn't take out the number 1 high, broke down below the number 2, and thus giving our trade. You can see that happened a couple of times here. We kept making new highs, kept notching new highs almost on a daily basis. You see the trend is very strong. The trend is up. You've got to use a little bit of common sense here and not trade against the trend. Notice here we did get a couple of 1, 2, 3s where we broke down but couldn't really sustain closes below that number 2 point. We broke down below but bounced back higher, couldn't really close again. Same thing here. 1, 2, 3. That one did not confirm. We got 1, 2, 3 right here. spent some time here hugging the moving averages, could not trade below the longer term price average, and the trend is up. You draw a simple trend line, the trend is higher. Same thing on these patterns here, the trend is higher. Would not want to really look to short this market. Now if we take this trend line and do a continuation, what happens? We ended up breaking that longer term trend line. Notice that the averages are also moving closer together, starting to flatten out and even potentially roll over. You can literally use a myriad of different technical indicators, whatever they might be, if it's MACD, stochastics, moving averages, RSIs, any kind of additional overlays that might help you for additional confirmation to help you avoid some of those potentially false signals. Let's look at another one. Scott said Baidu, B-I-D-U. Okay, Baidu. And here we had a 1, 2, 3. We have a large 1, 2, 3 all the way up here at 285 down to 240. So large, wide-ranging $45 trade here. This is still in play. Notice that the prices broke down below here, and then we gap straight through it on earnings. Would not think that this is by coincidence. But what did we do? The market, after it gapped down, came back up and retested the breakout level. So the gap down occurred right at the breakout level here at 236, 237, whatever that is. Came back up and retested, provided that conservative entry to reshort that market. If you got in here on the retest, it's already trading approximately $10 or so in your favor. Now, seasonally, it looks like we could be in for a period of short-term weakness before trading higher. Something like Baidu, don't know how much seasonals are going to come into play. We come back and take a look at some other trade signals. We had a nice 1, 2, 3 top in October. Here we had highs of 275, lows of 260. So we're looking for about a $15 gain. Came down here and met that in relatively short order. Let's look at a couple of other symbols here. Joanne said AA. Go to Alcoa. All right. So here we are, don't have anything forming at the moment. Why is this not a 1, 2, 3? We're not at a 52-week low, so we're not at a 52-week low. We'd have to take out these lows back in here for a new signal to occur. But we've had a couple of nice trades here in Alcoa. Now this was, we had earnings here, so we typically would avoid any type of earnings play, but it did come back and tried to fill the gap and then ended up breaking down. Same thing here, we had another gap on earnings, did break down here, had a couple of retests of that initial breakout, and then looking for targets of 37.50 on AA. All right, well, I hope you're starting to see the power of these patterns, how simple yet effective they truly can be. Personally, I prefer the longer term time frames, such as the daily and weekly charts. Also like the 4-hour charts on the futures and forex markets. I do see some other equity symbols coming into the chat area, and due to the sake of time, we need to honor some of those that have come in for the futures. And I think Raul typed in he wanted to look at gold. So let's look at the gold market. And that's a great market, Raul, because we're watching gold as well as all of the other metals complex very closely in our Seasonal Swing Trader Pro membership product. And gold is formulating a potential 1, 2, 3 bottom. Looking over here at the 5-year average, we are due for a boost here into early in mid-September in gold. Again, this is just a 5-year average. It can't hold a ton of weight. We do like to look at some of our other tools that provide 15 and 30-year averages and so on and so forth. But looking at just what the raw 1, 2, 3 top and bottom pattern has done for gold and some of the other metals complex, you can see they've been quite powerful. Now this one's setting up here. You can see we've got the number 1 point at 1210. And let's just extract this a little bit here. The number 2 point at 1235. It did trigger. See, we did get this little stealth signal here on 726 for a trigger, but we can't maintain subsequent closes and or a close above and then a retest for that market. So that prevents us from just jumping on this board arbitrarily and just hoping that it shoots higher. We like to see one, even two, maybe three closes above the number 2 breakout area, and then see some retest of that number 2 point as kind of an extra confirmation for higher prices. Note that this is our target, so we're looking for a 1235 to 1260 move. So it's about a $2,500 move in gold. But looking back here in the past, notice that this pattern has been very effective in the gold market. So here was a 1370 high, a 1335 trigger entry with targets at 1300. Very nice move there. Here was another one, 1, 2, 3. We got a move down, and then we go back. Here's another top, 1, 2, 3. These are fairly accurate in both the metals and the energy complex. We can go back even a little bit more and see some additional signals here. 1, 2, 3. You see the move down. 1, 2, 3, and the move down. This one was somewhat of a fake out here. Moved sharply higher on whatever news was occurring back there in June of 2016. That might have been the Brexit announcement, if I recall. So hopefully using some common sense would keep us out of any markets in the metals and currency markets at that time, even perhaps the energy markets. But we can also look, just for comparison's sake, to show that whether you like gold or prefer silver or copper or whatever it might be, here's a trade, nice long in silver. We can go through. We don't have much action here. We have a 1, 2, 3 that has not triggered yet in silver. And then let's take a look at one more, copper. We got a couple of members trading platinum, palladium, so we provide analysis for that as well. Here we're waiting on a setup for a confirmed setup for copper. Copper can also move pretty nice. See a very small 1, 2, 3 here, and then down, and then a 1, 2, 3 here, and then down. You can see this chart is marked up because we have traded this in the seasonal swing trader alert service. Somebody asked about soybeans. We can take a look at soybeans. So the front month here is the November contract, ZSX8, the continuous contract with the front month, which is November. And we had a nice 1, 2, 3 trigger here, 1, 2, 3 trigger here. Number 3 didn't quite stretch down as far as we wanted it to, but arrows are set aggressively so you can at least see the alerts happening in action. But that has moved up to the target area at 902. So that is about a 40-cent move, or $2,000 per contract. And then we had a 1, 2, 3 top here in March. And this all played out very nicely with what we know happens seasonally in the grain market. See this over here in the 5-year price average. We topped out almost to the tick right here in June. Boom. Right here. Boom. Price, actual price. Boom. So that's that on soybeans. The grain markets are awesome to trade with this system because we are always looking for tops to occur in the summer months. Here we go again here we go and take another look at corn. We didn't quite reach the extended high we needed this year in corn, but you can see back here in 2017 we got that nice 1, 2, 3 top, met the profit objective, and we also know that we bottom out in the month of November. And see this November, and here we are in November, 1, 2, 3, and we shoot up to the upside. So that's a look at corn. Okay, we have time for a couple of more. Barbara asked if it works on currencies. Ben asked about the euro. Well, why don't we take a look? Let's just start with the 6 majors and we'll go through all of them. So here on the Australian dollar, boy, oh boy, do I love this pattern in the currency market. It works like clockwork all the time. In fact, I find it to be probably one of the most consistent setups in the currency market, especially on the daily and even the 4-hour, the 240-minute, if you want to trade shorter time frames. Here we have a 1, 2, 3 bottom in the Australian dollar. We're actually long the Australian dollar. Membership subscription has been pretty choppy here. Let's look at the last trade that occurred. according to the 1, 2, 3 on the daily time frame, was back in February, end of February, early March. Notice that that worked out beautifully here on a trigger below this area here. We shot to the downside. Here are a couple of other setups. 1, 2, 3. Shot to the downside. 1, 2, 3. Shot briefly to the downside, and then took out these highs, negating that symbol, or negating that trade. And then here we have another one in Jan of 16, a 1, 2, 3 bottom, and shot to the upside. We'll look at the 6B, which is the British pound, and we'll start where we were. Here's a 1, 2, 3, went to the upside, 1, 2, 3, chopped around, and then eventually reached target here. Huge news here. That was the Brexit news. Would have stayed out of all that mess. And here we got some new counts, 1, 2, 3, trigger, traded briefly to the upside. We had another chance, 1, 2, 3, traded to the upside, took a little bit of heat. Again, this is your risk down here. Shot to the upside. This chart is heavily marked because we're always looking at the currency markets. Here's a 1, 2, 3. We had a move to the downside, a chance to lock in profits here. And then we have new counts trying to print as we continually make new highs. 1, 2, 3, new 52-week high here. We get shoots to the downside. A little bit of profit, and then trades back up, makes new highs. So we got a new one count. Notice that this is still trying to print. I would avoid this. This is too wide. The 2 and 3 are too wide. Although it did work, or is working at the moment, it's not a trade that I would take. Look at the Canadian dollar, same thing. It's a trade we were watching but missed, unfortunately, but it's a trade that is paying well for those that took it. And here's another top pattern, 1, 2, 3, 1, 2, 3. And let me mention here on the futures markets, one of the beautiful things that myself and our members take advantage of is that whether you are a futures trader or a stock trader or a forex trader, there are plenty of quote-unquote options to take advantage of these moves. Some people will write in and express concern about their lack of knowledge on the futures market or futures options, because we trade a lot of futures options, and you don't have to trade the futures market. You can, if you're just a pure stock trader, equity trader, you're trading an old school Scott trade or E-Trade account, something like that, you can trade. There are ETFs and ETNs on a lot of these commodity markets where they're trading gold, crude, the currencies, even some of the grains, although they're not as liquid as the futures or futures options market. I encourage you to take a look at your other alternatives. So we've got people trading this market in via FXC, which is the ETF. So it's the currency shares ETF on the Canadian dollar. You're going to see the same pattern. It's going to be a little bit more spotty because there's not as much volume in these markets, but it's the same pattern. So it's really a great opportunity. And if you're a forex trader, you can trade forex. You can trade the USD CAD. If you're trading the euro currency, you can trade the euro USD. Trade the yen, the US yen. If you're trading the Australian dollar, you trade the Aussie US, or you can trade FXA, the ETF. My point is there are so many options, so many alternatives to take advantage of these markets. You don't have to buy the currency futures contract. You don't have to trade the futures options contract. My point is there's so many alternatives to take advantage of these opportunities. And that is why I stress in the presentation whether you are a stocks, futures, options, or forex trader. I mentioned we are long the Australian dollar. We took longs in the Australian dollar futures contract, which is the 6A. There's a micro contract in the that trades on the CME, which is 1/10 of the product, which is M6A. We already told you about the currency shares ETF, which is going to be FXA for the Australian dollar. And if you're a forex trader, you can trade the Aussie USD. So right here, it works on all markets. And one of the things that we like doing on these 1, 2, 3 plays is selling out of money options. So here on the Australian dollar. Play we did last week and are in currently is we sold at the money put on FXA. We bought the Australian dollar's future contract. We bought the forex pair Aussie US, and we sold futures options. We sold out of the money futures options. So so many different things you can do, again, whether you're trading corn, soybeans, gold, crude, nat gas, unleaded gas, the S&P, copper, so on and so forth. You can take advantage of all these types of trades. I did tell you we would go through the other currencies, so let's quickly go through the other two. Let's go to the euro, and then we'll look at the yen. So on the euro currency here, we're kind of trading range bound and kind of in no man's land. Here was a 1, 2, 3 top pattern that worked out like a champ. This trade 125, well, I don't even need to look at that. I'll go up here, 125.80 down to 122.77. If we pull up a calculator, what is that? 125.80 minus 122.80. That's a 300 tick move. You multiply that times $12.50, which is the size of the futures contract. That's $3,750 per contract. You don't want to trade futures or futures options. Again, go to the ETF, FXE, buy puts, short FXE, sell call spreads, sell out of the money call spreads, sell at the money call spreads, sell Euro USD in the forex market. So many different ways and literally about a dozen different things you can do there. Last one, as I know we're running out of time, is the 6J, which is the Japanese yen. Again, same trade here, 96.15, 93.93, 96.15 minus 93.93, about a 220 tick move times $12.50. About a $2,800 move, and you can see that moved right on down and tagged that. Right now we don't have any setup. If we go back, let's see what else the yen has done. Here's it's a wide bar. Number one probably would have avoided that. So those are a couple of examples in the currency market. So in addition to the 1, 2, 3, we're also kind of putting in maybe is the head and shoulders pattern, which is a pattern you would see in the chart pattern principles and chart pattern cheat sheet that's included with the purchase. But right here over in our seasonal window, right around this period, end of March, early April, we know that there's a high probability that we'll make a move down into May and June before we see a potential bounce. All right, one last market. The S&P, I was waiting for somebody to ask to look at the S&P. S&P on a 15-minute chart. Okay, we can do that. And let's see what we've got cooking. Let's just move this back here and we'll move forward and look at some setup. So here's a trade that's kind of occurring in the late European session. A 1, 2, 3 15-minute chart. For those trading in the early AM or trading over in the UK, we have a nice little setup here. Highs at 27.86, lows at 27.83, looking for a quiet 3-point move or $150 per contract down to 27.80. We get that, we trade higher. Here's an end of day setup in the late New York afternoon session. We have a 1, a 2, a 3. We have highs here at 27.95, lows at 27.90. We're looking for a 5-point move. We get the breakdown, looking for a trade down to 27.85. We get that right there into the close. There are a couple of additional setups here, again in the early AM. We've got lows at 27.82, highs at 27.87. It's a 5-point move, looking for 27.92s to trade. So here we break out, we come down and retest. We come back, reach our target at 27.92. And then again, all before lunchtime, we have another 1, 2, 3 top. Here, the high is 94, the low of around 90. It's a 4-point move, so we're looking for 86s. We break down, we reach our 86 profit objective and we call it a day. So we're able to grab 5 points here early in the morning, another 4 points here in the afternoon. That's 9 points per one lot in the S&P, or $450 a contract. Not bad for a few hours of work. So I think you get the point here. These setups occur time and time again. Again, it's not rocket surgery, but the point is, would you like this semi-automated? All you have to do is enter the trade. The indicator and the scanner find the setups for you, plot your entry point, plot your exit point. You know where the risk is, and to me, that is about as black and white as it can get. So I hope you enjoyed looking at those setups with me. So let's ask the question, is this training for you? I don't know. You would have to ask yourself that. Is this indicator and training for you? If you are one that likes to pour over hours and hours of modules and hundreds of pages of literature and PDFs and need to know all of the algorithms and calculations behind something that drives a particular indicator, this is probably not for you. If you want a 99% black and white mechanical system, if you want a simple system, if you want a profitable system, and most importantly, something that can be repeated over and over again on any markets and any time frame, this is probably for you. So here's what I can do for you. Learn to spot these patterns and trade like a pro. As a special thank you for attending this session today, you can get the 123 high-low scanner and indicator plus the following bonuses. So you get the seasonal 3S code high-low indicator and scanner for 3 different platforms, Thinkorswim, TradeStation, and NinjaTrader 8. You also get the Chart Pattern Principles PDF manual and trading guide, my chart pattern cheat sheet, plus my 25 top option strategy guide, and VIP email support, a truly unlimited value. I am a normal human being just like you, looking to extract money from the markets. I enjoy working with my clients and happy to help wherever and whenever I can. We're in this thing together trying to create a living or additional income for ourselves and or our loved ones and families. So here's what I have for you today. The 3S code for $177. Yes, that's right. A one-time payment of $177, one-time payment, non-recurring fee. That includes the high-low indicator and scanner that we just went over. And that includes the Thinkorswim, TradeStation, and NinjaTrader 8 platforms. Also, you get the Chart Pattern Principles manual and trading guide, a PDF manual consisting of over 100 pages detailing the 123 setup in detail, plus other high probability patterns for trading stocks, futures, and options. My chart pattern cheat sheet, a handy desk reference resource for the highest probability patterns that occur on a daily basis, plus my top 25 option strategy guide and resource manual. And don't forget, with this offer, you get continual VIP email support, as well as any new upgrades that we may make to the indicator and scanner for the life of the product. The offer link to come on board is seasonalswingtrader.com/scan. That's www.seasonalswingtrader.com/scan, SCAN. You should see that there on the slide. It will also post that for you here in the chat area. Again, the link is seasonalswingtrader.com/scan, a $177 one-time payment. Folks, that is an amount you can easily recoup with one trade in the early morning hours or in a nice swing trade. And that is literally all you will need to trade this pattern over and over again alongside myself and our other seasonal swing trader members. So I really appreciate the opportunity to present today. I want to thank you for your time and your attention and your questions. It's truly been an honor to present to each and every one of you. I hope that you learned something new or perhaps rediscover something old so you too can start seeing favorable results to your bottom line. So I hope everybody has a great rest of the day wherever you are in the world. Take care, stay seasonal, and we'll see you on the inside.